Why don't we get into Apple in terms of what we expect to see, what we expect the market to take away from these numbers? And I'm fascinated by this in particular because it's 7.5% of the S&P. It's $3 trillion in market cap. The stock's up close to 50% year to date. And yet it's a flat revenue year, basically. We're not really expecting much in the way of growth in the overall business. So what are you going to be looking for specifically?
Yeah, flat may be generous, right? The consensus seems to be that Apple's going to come in with their third consecutive negative revenue print, and that's probably going to be overshadowed by a lot of positive talk about the next upgrade cycle, the iPhone 15, where we see sales going toward the end of this year, because that phone's going to roll out pretty soon here. And I think that any good news that they can say about that, any upbeat guidance that they can say about that, those numbers, that's going to translate to the street as positive confidence about the consumer as a whole. Because Apple is a huge consumer services brand, product brand, all those good things. And so they reflect very positively on the consumer's willingness to spend. And so I think hearing good, positive guidance from Apple on that ecosystem and the upgrade cycle is probably going to be exactly what the market wants to take away from the announcement that we get from Apple.
You have obviously a China comeback story in there as well. So it's many things to many people. Apple is.
It better be good though at 33 times.
So this is
because it's expensive.
Right.
The average 10-year valuation is at 19.25 times. So I get it. Services has changed the mix, and services, I think, will be the bright spot, Mike, for the quarter. And I think online advertising will be the driver of that. But you could see a service number of something like 6%. But I think expectations for next quarter is that it accelerates to 10%. So we're going to be very important. That's going to be the piece, I think, that people focus on, not the iPhone. We know that those numbers are going to be weak.
Could I say, though, to that point, I actually don't care as much about the iPhone as I know the street cares about. I really want to hear more about Apple Financial, right? They made a big shift that people may not have noticed. They initially came out with Apple Pay, then the savings account and the credit card, and all of those were done with subsidiaries, right? Those were on other people's platforms. But then with this new thing, Apple Pay Later, they actually went through the trouble of standing up their own subsidiary, which means that they plan to take this thing a little bit more seriously. They applied for licensing. That's the first step to becoming a bank. And so I really want to hear more to your point about services. Where does Apple plan to go with the finance piece? Because that's where I think the new frontier could be for them, seeing services as that push and bringing in those dollars from Apple Financial.
That will help margins, too.
To get very excited about the potential for longer-term growth from here, it almost has to come from these new humongous categories that they're, slowly building, I suppose. Steph, though, 6% services growth, that's pretty good. I mean, CPI was probably average 6%, over the last little while, right? So you look at, if you look at, relative to how the economy's been growing nominally, you do want more. You want it to accelerate from here.
And that's why I go back to valuation. Like, what are you really getting in valuation for this kind of valuation? If you think that, to Malcolm's point, that the services can expand in categories, then sure. I mean, I would be more generous in terms of valuation, but still 33 times is a really big number.
And I think just to broaden it out slightly, I mean, Microsoft has traded soft after its own report, and the report itself was perfectly fine, right? It wasn't as if people were taking a lot of issue with it. It's down 10% off its high, and it feeds into this general view that the huge popular mega cap NASDAQ stocks maybe did what they can do for you in the short term. So where does it leave the rest of the market?
Well, see, then that's why it's so important to focus on the economy, earnings, and then we're also seeing this broadening too, right? I hope the broadening lasts because that's where I am. That's more of the cyclicals. You don't want to ignore technology, but 35% of the S&P 500 weighting in tech and comm services, that's a lot. And as a portfolio manager, I would never have 35% of technology or any sector for that matter. That's just not a good risk profile, right? So I hope that we do see a broadening. And I think the macro, the economy being better, actually supports the broadening.
We will see, though, if Apple's positive guidance actually makes enough of a difference, because as I told you the last time I was on with you, Mike, about 2 weeks ago, the market has responded with a big but, right? If we look at Uber, strong earnings. If we look at Chipotle, if we look at Heinz, Kraft Heinz, if we look at any airline, but has been the response from the markets. And so even with positive earnings, this very well may be the last good earnings season that we get through the rest of this year. I know you're more positive on the markets than I am, but if it is, the market still is responding with a big yawn.